Hey, it's Danny here with another investing video. So I'll just dive into this. So we have the big position, NLY. So that's a real estate company, although it manages loans. Basically, what happens is banks sell their loans to them, or somehow the loans end up here, and they basically take the spread between whatever interest they're paying plus the rates on the mortgages. So it's typically yields around 13%. It's gone up quite a bit price-wise, mostly the Fed lowering the interest interest rates, the Fed fund rate, a little bit. Plus, the uncertainty has actually helped mortgage rates actually increase, so their spread has actually improved a decent amount. So they had a very strong quarter. A lot of people were worried their 65-cent dividend, yielding, 13%. It was actually, I think it was pumping toward 14% at one point. But that they were worried that that very um, strong dividend was in danger, but actually earnings increased quite a bit, so the dividend is now extremely well covered. Now, obviously, that's just on one quarter, but it's sort of the trends don't change very quick, so likely a full year is pretty good. You know, hard to say. You go the further out you go, but it's at least feels very solid, and people are anticipating the dividend is very well covered, which it now appears to be very well covered, at least in the next year, and probably, think about if the next year is good, probably the year after is probably going to be fine. So you probably got at least 2 years of a good dividend before there could even be any problems. And you think about that as 26% yield. Um, so and then even if it gets cut, it probably would just be to protect the NAV, the net asset value. So uh, people are responding positively that it's a very strong holding at this time. So that's increased quite a lot. Obviously, our calls were in fairly early, so the calls aren't looking super good. Same with Zim. But I'm happy, because I got 2 years. If I take 26% plus the amount of money for these calls is pretty good, even though um, obviously it would be a lot much better now. But it is what it is. We've done pretty well with this portfolio, so and that a lot of the calls too are to keep the leverage down or the interest down, and so they're doing that job. So obviously, we're looking at some pretty strong income coming in off that. Zim is gonna be reporting sometime next month. I don't think they've set a date, but a lot of people are estimating $4 per share. Obviously, there's the 25% withholding, so that's like three times 1,300 is about $4,000 in dividends coming in. So that's just a guesstimate. We don't know till we get earnings, but and who knows if that guesstimate is good or bad. Again, Zim, my options are pretty negative on the value, but I mean the thing is, I'm never gonna sell options at a loss. I'll just get called. I'll just wait, and that's why these are all 2 years out. Is that the other thing too? Is in 2 years. I mean, shipping is good right now, and that's one of the things too. Is like, okay, we're gonna take a big dividend. Um, how big is we'll see, but that just those are some estimates. We're gonna take a big dividend, and then it looks like there's some good short-term outlook. Obviously, freight rates have been high. Uh, does it collapse? I mean, there's a pretty good possibility it collapses, but the Trump tariffs are kind of holding shipping together at this moment, and it may still collapse, but it looks like this current year, we've got maybe another good year in it. Maybe good isn't is an overstatement. Maybe more like decent, but in any case, it's still pumping cash at this point. So, but in 2 years, who knows? Maybe that could be a worthless option. But if we get called, we get called. I mean, I think I don't think we're going to get called early on any of these. I mean, just because I think that it makes more sense for option holders just to keep selling the option for a profit rather than to buy the security usually. So I'm not really expecting that. So the big thing is, with all that, good income and price improvement, it's enabled me to add in a bunch of income realty. The yield is pretty solid on that, like high percents. I think it's like 5.8-ish percent. Plus we're selling the options. I was going with 1 month options, trying to do 1%, but it looked a little dangerous on it to me. But I did, on a little dip, I managed to buy it back for a good profit, and then I went for 4 month options. So the yield's a little bit lower on that. I mean, we got, what is that, like 600 off of 16,000? 600 off of 16,700. Let me just grab the calculator. So it's like 3.5%, but it's 4 months, so it's almost like 11%, a little bit below 11%. But I mean, well, actually, that's actually pretty close. So yeah, I mean, we're still, those options are still running around 1% a month. I mean, maybe a little bit lower now, but 1% a month on the options plus the 5.7% dividend. That's pumping our yield. At 5.8. That's pumping our yield. I'll just say 17%. I think 18% is a little high, but 70% yield. I mean, of course, there's this one has a pretty good chance of getting called in 4 months, but on the other hand, it gets called, that really drops my leverage to basically zero and gives me opportunity. So I'm liking where we're sitting here. Obviously, there's especially with I got 60,000 in securities, but we've got the options are really well, 60,000 net liquidation, but a lot of it is we've got the cash is negative 22,700. So, but obviously that's going to be paid down quite a bit by the dividends over time. And I mean, the bigger thing is the options position. How much is in options? In some ways, the desktop view is a lot better, but in some ways, the mobile view is a little more informative. They both have some kind of advantages. Like I can almost instantly on the mobile view find out how much money I have in options. Desktop view is like, why can't I find this? That's a good question. Well, just see here the positions. We could probably just, well, I mean, just kind of estimate. We got 4,000, and I think we got like about $10,000 worth of options. So I mean, the thing is just the options expiring. I mean, obviously that takes a while. Is $10,000 in itself. So the options are quite a lot of the value. So a lot of this, I mean, this portfolio just takes time because essentially we're got $10,000 worth of options that we've got to earn. I did kind of sell them pretty tight, so I think actually when they called, they're actually going to be tiny losses. Well, except for income realty. Income realty will be a little bit of a gain. But Zim is actually going to be like, how much of a loss is Zim being called? Okay, well Zim is actually sort of a more substantial one. But I think it's also less likely depending where things fall. But NLY is pretty low, but even any sense, there's not much. Not much. I mean, it's pretty strong. So I guess in retrospect, I kind of wish I had worked these options a little bit higher. But it is what it is, you know. You can't really undo what you did. But things looked kind of gloomy for a while, and Trump has really, well, I mean, I don't know Trump, but you know the dynamic has changed, I guess I should say, with the Fed. So a lot of these options are kind of sold in a more gloomy time frame for these ideas. Well, although I would say Zim actually, the fundamental thing driving the Zim stock price, I think, is actually Trump's tariffs. So, um, you know, whether or not that's good for economic policy, and a lot of people think it's not, and it may not be, but I think it has been good for the Zim stock. It's been good for shipping. So, but I like where we're sitting and just kind of play it as it goes. It's kind of turning into a slow burn because all the positions are good. There's not much to do on it. But next big thing will be, you know, 4 months, see Income Realty gets called, or maybe it takes a dip. Maybe I buy that back and look where to go. But feeling strong, so going well. Till next time, peeps, okay?